Welcome to Xpertifi newsletter. We will be discussing current banking news to keep you updated and informed. Let's dive into the news from last week. Banks struggle to meet SEBI's cybersecurity deadlines. Banks are struggling to meet the January 1 deadline set by SEBI for implementing a cybersecurity framework. Many banks, especially multinational ones, have asked SEBI for more time due to strict requirements. These rules include frequent software audits, quick responses to disruptions, working with IT service providers, and forming internal panels with independent experts to ensure compliance. Failing to follow these rules can result in compliance lapses, which banks, particularly international ones, want to avoid. Cybersecurity has become a top priority, with regulators like SEBI and NCIIPC issuing frequent guidelines and advisories to reduce risks. Home loans drive banks' retail books. Indian banks are seeing strong growth in loans driven mainly by retail borrowing. Retail loans include loans for homes, vehicles, consumer goods, credit card dues, and unsecured loans as defined by the RBI. Three states, Maharashtra, Delhi, and Gujarat, together make up for over half of all retail loans disbursed by banks. Maharashtra leads, contributing nearly 25% of the total retail loans, thanks to high home sales and property prices. Fintechs are shifting focus to secured loans. As the RBI tightens rules on unsecured loans, digital lenders are shifting focus to unsecured loans like microloans against property, MSME business loans, and green financing. Some are using a mix of digital and physical methods or offering loan at home services to grow their secured loan portfolios. However, lenders find secured loans more time consuming due to the need for physical verification and collateral checks. To adapt, fintechs are considering opening physical branches and hiring staff for on-ground verification. They are exploring loan products such as business loans, property loans, home loans, solar and EV loans, and vehicle financing with a maximum limit of Rs 1 crore. The RBI's new rules on risk weights for consumer credit have slowed the growth of personal loans and credit card borrowing. Key ruling by Supreme Court involving capping of charges on late credit card bill payment. The Supreme Court on December 20th overturned a 2010 judgment by the National Consumer Court that limited banks to charging no more than 30% interest on late credit card payments. The NCDRC had previously ruled that charging over 30% interest on credit card dues was an unfair trade practice. The Supreme Court allowed appeals by banks like Standard Chartered, Citibank, and HSBC, among others, effectively removing the cap on interest rates for late credit card payments. Customers face higher costs and financial stress, prompting the need for timely payments and reduced credit card usage. Banks can gain increased revenue and flexibility, but risk customer dissatisfaction and regulatory scrutiny. Before we say goodbye for now, let's see how the various indices performed last week. Xpertifi has launched a banking course that guarantees 2 interviews with banks and NBFCs within 1 month of completing the course. So make sure to register yourself and inform your friends and family as well. Follow Xpertifi for banking jobs and news on Facebook, Instagram, YouTube, and LinkedIn. See you next week with more news. Till then, take care.